Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COPART INC annual report. COPART Inc. offers a wide range of services for buying and selling vehicles online. The company's key businesses and services include online auctions and vehicle remarketing, vehicle processing, and sales through its virtual bidding technology services for vehicle sellers, insurance companies, banks, charities, fleet operators, dealers, rental companies, and individuals' Blue Car and Cash4Cars platforms for selling vehicles to the public. COPART Recycling Service for purchasing parts from salvaged vehicles. COPART 360 Technology for capturing 360-degree views of vehicles. IntelliSeller Tool for assisting sellers in auction decisions. Purple Wave Inc. Services for wholesale construction, agriculture, and fleet remarketing. Non-salvage powersport vehicle remarketing services through live and online auctions. The company sells its products to licensed dismantlers, rebuilders, repair licensees, used vehicle dealers, exporters, and the general public. The stock price of COPART Inc. (CPRT) has dropped by approximately -13.81% over the past year, with several key events contributing to this decline. The main causes include COPART's Q4 2024 earnings miss, where the company missed quarterly profit estimates due to higher global yard operations costs and non-recurring expenses. This led to a nearly 6% drop in shares. The release of Q3 fiscal 2025 results, which showed revenue falling short of expectations despite service revenue increasing by 9%. This led to a significant decline of approximately 20% since the results were released. Broader market pressures and industry challenges also played a role, including concerns about COPART's growth trajectory, high valuation, and slowing profit growth. A decrease in U.S. inventory units due to lower assignments and faster cycle times further contributed to these pressures. Finally, a weak August jobs report intensified concerns about a deteriorating labor market and potential economic downturn, leading to a 3.9% drop in shares on September 5, 2025. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown due to an increase in vehicle sales through online auctions, expansion into new markets, and growth in services subsequent to auction. Additionally, the listing of vehicles on behalf of insurance companies in Germany has contributed to revenue growth. Revenue decline drivers. On the other hand, a decrease in vehicle sales through online auctions and service revenues have led to a decline in revenue. Furthermore, a decrease in vehicle sales in international markets has also contributed to this trend. Overall, the company's revenue growth is driven by its ability to expand into new markets and increase services subsequent to auction, while revenue decline is primarily due to a decrease in vehicle sales through online auctions and service revenues. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margin changes over the 3-year period. Initially, net income increased by $124,606 from 2023 to 2024 due to growth in service revenues, particularly in the U.S. and international markets. However, this trend was short-lived, as net income decreased by $185,916 from 2024 to 2025. Profit margins also showed a decline. Operating income margin decreased from 38.3% in 2023 to 36.6% in 2025, while net profit margin increased from 31.9% in 2023 to 33.4% in 2025, seemingly contradicting the overall trend. The reasons for these changes are multifaceted. While service revenue growth contributed positively, acquisitions may have resulted in delayed benefits and potential losses or lower profit margins. Conversely, increased costs from subhaulers, trucking fleet operations, higher fuel costs, and additional expenses from weather events negatively impacted net income and profit margins. The company's financial performance indicates a significant improvement in its ability to generate cash. With an increase in net cash provided by operating activities from $1,472,564 in fiscal 2024 to $1,799,750 in fiscal 2025, it is clear that the company is generating positive operating cash flow. This trend suggests that the company's operations are becoming more efficient and profitable, allowing it to generate a substantial amount of cash from its core business activities. The company's debt level and interest expenses have undergone some changes over the past few years. While there is no significant change in total liabilities, long-term debt has increased by $200 million to $1,250 million. Interest expenses also show a fluctuating trend, with a decrease from $3,127 in 2024 to $2,019 in 2025, but an increase from $2,614 in 2023. These changes indicate some movement in the company's financial obligations, although the overall impact is relatively minor. The financial performance of various segments and regions was a key aspect of the company's overall success. The U.S. segment stood out as a top performer, accounting for 83% of revenue. Among the regions, the U.S., U.K., and Canada were notable for their strong performance, driven by historical demand, significant acquisitions, and early expansion efforts. On the other hand, several regions struggled to match the pace of these top performers. Europe, Brazil, Middle East, Bahrain, Oman, Republic of Ireland, India, and Finland were mentioned as areas where expansions or acquisitions took place, but no specific performance metrics were provided. The UAE, which had an acquisition in 2008, was also not highlighted for its performance. Overall, the company's growth strategy appears to have been focused on expanding into new regions, with mixed results. While some areas showed promise, others remained underperforming. Management is optimistic about the company's outlook, aiming to generate sustainable profits while providing environmental and social benefits. To achieve this, they plan to expand into new regions through facility acquisition and development, offering integrated services and strengthening global coverage for vehicle sellers. However, management acknowledges potential risks such as macroeconomic factors, economic downturns, and cybersecurity threats that could impact the company's growth rate. They also mention evaluating new accounting standards, updates to assess their impact on financial reporting requirements. In terms of strategy, management plans to permanently reinvest funds outside of the U.S. and use cash flows from operations to finance working capital needs and grow the business. The company has a low concentration of credit risk due to its investment policy and does not require collateral on accounts receivable. Management is also diversifying investments to limit exposure to any one issuer or pooled fund, maintaining safety and liquidity. Overall, management's strategy focuses on expansion, sustainability, and risk mitigation, with a commitment to generating long-term value for stockholders while providing environmental and social benefits. The company's financial summary reveals that it has actively engaged in share buybacks. As of July 31, 2025, the company had repurchased a total of 458,196,792 shares under its stock repurchase program. This indicates that instead of distributing dividends to shareholders, the company has chosen to utilize its funds for share buybacks, reducing the number of outstanding shares and potentially increasing earnings per share. That concludes the financial summary for COPART INC. Feel free to comment below, and I will be happy to answer them when possible.